Hi friends, welcome to yet another episode of Real Estate Street Talk with Riyaz Rauf. Today it's going to be another question and answer session, and this time we are going to focus in general because last time we focused on the immigrants and the first time home buyers. Today it's going to be about the general issues that you may be having. So let me do my best to answer these questions and also keep sending your questions so we may be able to take out for our next month's Q&A. Thank you. A good question. Now, in this question, there are a few questions. Number one, I think the person who is sending in this question is asking, will the interest rates go up? Today, when we are doing this recording, we are in the middle of January 2023. So, just to let you know, in Canada, the Bank of Canada has 8 occasions a year to meet and discuss and make decision about the Bank of Canada rates. It doesn't mean these are days that they will be increasing or reducing or doing nothing, but these are days that they will be announcing their interest rate policies. So let me also share the dates that are going to be vital in this context for this year. January 25th, in another 2 weeks time, there will be a central bank announcement on interest rate. Then March 8th, April 12th, June 7th, July 12th, September 6th, October 25th and December 6th. So there are 8 occasions on which they have the ability to announce their interest rate policies. I personally believe at the moment the whole idea in the last 9 months of increasing interest rates almost 300% is to cool down the economy. In other words, we have to create unemployment and we have to keep the inflation low. Whatever has been done is taking effect because our inflation rate is around the 6.5% or between 6.5 to 7% mark. At this point in time, it used to be 9 before. Now, there is a lag between what is being implemented and how it takes effect in the market. So whatever was done 9 months ago is beginning to take effect only now, and whatever was done last month, we will see results only after about a year. So I am confident that we are able to bring the interest rate down, but not to the 2% that the central bank ideally wants, but I think for around 4% by the end of this year. That's number one. Having said that, last week we got the employment data. While we expected all this is done to reduce employment, we created 104,000 new net jobs in the Canadian economy. That shows the strength of the Canadian economy and also the North American economy itself. It's happening in US too. Now, having told that, I would expect the interest rate hike around 0.5% on January 25th, and probably in March it may be 0 or 0.25. So out of the 8 months that are available for announcement, I think we will have 2 months of interest rate hike and 6 months of either interest rate being the same or lowering. So that's my prediction. The second part of this question is, the person who is writing in says they have bought 2 investment properties and they're feeling the interest rate and what relief is available. So one of the good things is the moment you buy your first investment property, you are an investor. Again, I'm going to tell you, I'm not a tax consultant, I'm not a mortgage broker. So please speak to mortgage brokers and tax consultants about what I may touch on, because real estate and these go hand in glove. One can't leave not talking about it, but get your expert opinion. The moment you are an investor, you have a lot of write-offs that you can do. The chances are you might be bleeding on both the properties for about $600 to $800 a month, which means put together you are losing about $1,500 a month. You are losing about $1,800 a month. 1,500 a month, which is 18,000 a year. Now, if you are in the 200,000 income tax bracket, you might be paying taxes on CRA on 200,000. Now you can write off this loss and bring your taxes down to 182,000, and that's one of the reliefs that you are looking at. That's one. The second is, at the end of the day, when you most likely, because you say you are a homeowner who bought 2 homes, so I am also understanding there are 2 other things that I need to discuss here which might be of interest. Most likely you bought these 2 homes by taking equity out from your main house. So when you take equity out of your main house and buy 2 homes, you are not just putting 20% down payment, 20% down payment on both those houses and taking mortgage of 80%. Here your total 100% is borrowed money, because you took a line of credit, you had to pay for that 20%, and you took a mortgage of 80%, you got to pay for the mortgage also. Now, because in other words, your total amount of money is, you haven't put anything down payment on your own without interest. It's 100% borrowed money that you bought both the properties. So that's one of the reasons that you're feeling the pinch more than most others. The third, when you borrowed and when you did this, your bank would have stress test you at that stage at 5% or 5.25% or at 7%. Most likely, since you say it's a some time ago, you were stress test at 5.2% to 5%, which means that you were already stress tested to being able to resist and stand this high interest rate. So those are the things that I would say at this stage, but speak to your tax consultant and try to get those credits that you might be able to qualify. On the other hand, the good news that I'm looking at is, I'm also looking at for this year, we would be looking at a declining interest rate in the 3rd and 4th quarter for sure, and I would even think 2nd quarter is going to be stabilizing and 3rd and 4th quarter being normal. So by the end of by this time next year, you are looking at a much brighter and a better future. It's a good question. The first thing is, owning a home for 4 years means you are owning, out of the last 4 years, you have already 3 years of solid appreciation in this house, and you have 1 year of losing appreciation. So at the end of the day, the house is valued much more than what you bought, and congratulations on that. Second, I only wish, because you haven't told me, I only wish that you are selling in order to buy something, because it's always good to be a homeowner unless your circumstances are different. I always respectfully request you, either hold on to the property or buy another property, even if it has to be small. That's the second one. Now, your question is not about that. The question is about when is a good time to sell. Now, I live in Ajax, so I understand the market a little better. And most of my investments are also in Ajax and Pickering. Now, selling, I would always encourage people to sell after June of 2023, and there's a reason for that. By the time we come into the first week of February, around the 5th of February, we will have the results published from TREB, or Toronto Regional Real Estate Board, for the month of January. But I bet you're going to see a headline which says Toronto real estate prices down by 25%. And that's going to shock a lot of people and depress a lot of people, and a lot of people who are in the selling mood. And that's nothing wrong with the market. Honestly, there's nothing wrong. Why it's happening is, last year in January, I believe the price was $1,245,000 for an average home in GTA. This year, the average home price we ended at 1,050,000, and most likely our price will be for January will be 1,060,000. So 1,060,000 compared to 1,250,000 is, I believe, about 17 or 18% drop. So I expect about 20% drop in the market. And in February, our prices went up to, I believe, 1,300,000 plus. Now, in February, when we say the February of this year is about 1,070,000 that we do, still we are going to have about 28 to 30% drop. Now we are going to see the media talking about month to month, year on year decrease in the prices. And this will prove, technically proving that every man who wrote articles saying there will be a correction of 30%, 25% are right. But this is a statistical bloodbath, not a real estate bloodbath, honestly. This dance will go on till about 5 to 6 months, till about May or June, where people will be scared thinking next month will be better to buy than this month because the prices are dropping steeply, although it's not the case. As a home seller, I would always suggest to you that you monitor month over month. What was the average price in December? Which is 1,052,000. What is the average price in January? I believe it's going to be 1,060,000, which is a $8,000 appreciation in price. You look at the month on month momentum that's building on to going up, rather than looking at the peak of last year and the lowest of this year comparison, which will make you fearful of the market. So, although many of us realtors will be educating our clients, not many would be doing. But if you take the real estate board to here, we got about 70,000 plus realtors. But about 38,000 do not do a transaction or do 2 transactions a year. So not everybody is going to talk to their clients, and the clients will be depressed. So I would suggest if you can hold on till June, May or June will be the ideal period to sell your home, because the confidence is there. People get to know what we are talking and they see the month on month appreciation, and this dance will be over, which I call statistical bloodbath in Toronto. That will be over by May at the most. Thank you for asking that question. Next. Thank you very much for the family in Barrie for asking a good question. This question would also explain some other things that I explained before, and probably something that I may in the same discussion explain later. So here we have a family that bought a 3-bedroom, 1-car garage in December of 2021. That was 13 months ago, to be precise, for 1,025,000 in Barrie, and congratulations to you, and you did the right thing. Now, in February, you say your neighbor's house or the adjoining house, which is a similar house with similar features except for few differences, sold for 1,300,000, which is a 275,000 appreciation in 3 months. Yes, that is what the market was last year. In January, February, March, we had a steep increase in prices brought about by all the reasons, and also people want to buy homes before the March restrictions came in, and also the mortgage restrictions came in, rate hikes came in, and also more importantly in the budget where foreign buyer taxes etc. were coming into play, and foreign buyer ban was coming into play. So there's a huge amount of people buying properties with very limited properties in the market that drove the price up by almost 30% over a 2 months period. You are right, that's what it happened. And you also tell me that there was a house that was sold in your neighborhood recently for almost 200,000 less than the price that more than the other house that got sold for 1.3 million, which is also true. But the question to you is, today, if I were to have a look at your house and if I can give you some details, I think your house still has some equity, and I believe your house is still worth at least 1.1 million. to be on the safe side, but you have to see a house to do a valuation and looking at the comparables, which is another subject. But on the other hand, if you ask me, is it the right thing to do? Yes, you did the right thing in buying, and you still have about 75,000 equity built up over the last few periods, because yes, you built up equity from December to January, January to February it went up, so you are still good on it. Now the question is, what would you want to do? I mean, say for example, as someone, again I'm telling you, I'm someone who always says keep accumulating properties. So if you were to stay for another 3 years or 3.5 years, which is a 1,000-day program, and you're going to build up at least another 200,000 as equity coming into your property, and you might be able to invest in your second or third property that you want to. On the other hand, there is another huge opportunity for you at this point in time, at this very moment. Let me explain it. When you bought this house for $1,025,000, let's say 1 million, you put 20% down payment or 200,000 on that house. Fair enough, because anything more than 1 million you need 20%, so that's why I'm assuming you put a minimum of 20%, which is 200,000. Let's assume today that house is not worth 1.3 million like in February, but it's worth 1.1 million. You may decide to sell this house. It may not sell in 3 weeks, it may take 6 weeks, but it can be sold for about 1.1 million. And if you sell it at 1.1 million, you're going to get the funds. This is what happens. You still have the 200,000 that you paid in the bank that's coming to you. You have an extra 75,000 coming to you, but you may get only about 25,000 after all the selling expenses involved. But at least you got your down payment of 200,000 and 25,000 as profit, and you still have that mortgage amount of 800,000 with you, which you can port to any other property if you are buying within 3 months' time. Check with your bank, because they are the expert on this. Now, this is an opportunity for us to go and have a look at a house for $1 million now. And the house that you're going to buy today at $1 million used to be about $1.4 million a year ago. And though that house most likely is going to be a 3 or 4 bedroom home with a 2-car garage. So this is an ideal opportunity for you to move parallel and expand yourself if your family is growing from a 3. See, at the end of the day, doing nothing much, you are financially, you are moving from a 3 bedroom, 1-car garage into a 4 bedroom, 2-car garage without no cost to you except the strain of going through all this. So these are opportunities that are being created by the present market situation that many people ignore. I'm not saying you have to do it, but it's an opportunity for you to move. People who sell low, buy low. What goes low, the highest price properties have come down more than the ones that were within the $1 million. So your property at the most would have lost about $50,000 value, or from the peak 200,000, but the ones that are 4 bedroom, 2-car garages have really come down. So this is a golden opportunity for you to move parallel, or anybody who is listening for this program, if you're thinking, those opportunities are huge at the end of the day at no extra cost to you. Thank you. Okay, so there are two questions on this. So you have your primary home for the last 10 years, you are quite comfortable, and you have an investment home which is you have owned for 3 years, so you are comfortable there. And my question is, you want to sell your primary home in Toronto now. My question is, do you really want to sell? And ask yourself, because I am someone who is quite interested in helping people build wealth. I do sell. We do, in fact, we call ourselves a household name, but we always try to buy more for people that sell. Here, the main two questions is, what is a good time to sell? And then, should I sell with a tenant? Those are the two questions. First, anybody who sells a condo, because condos are mostly bought by investors. So when it comes to condos, we always like to sell the condo with a A-grade client in it. For example, if there's a condo that's to be sold at $500,000 and if our clients have a A-grade tenant, meaning the tenant is paying on time and he has a good credit score, perfect tenant, I have no problem in positioning and putting it on MLS and with little bit of cleaning here and there and giving an inducement to the tenant who is living there, saying if it sells within the next 1 month, I may send you on a holiday to Cuba or someone. Give a small incentive, that's perfectly fine, in order for him to keep the place clean. I would like to, because the potential buyer, if he's an investor, he would love to buy this, because from day one when he gets a key, he has a tenant. Then there is no need for him to advertise, spend 1 month realtor commissions, and also keep it open or vacant for another 1 month, which means he is losing 2 months rent. So when it comes to investment properties and more so on condos, it doesn't matter, but we prefer with the tenant. However, if it's a house and if it's your primary home that is being leased out, we would always like to sell it vacant, because you need to get the house, you need to stage it, you need to show the people the functionality of each room and how those things work out, and people need to position themselves as a tenant. When they live in a home, it may not be in the best of condition, and also it will be messy. So the answer is, if it's a condo, I would say it doesn't matter, or it's preferred to with a tenant, a grade tenant. But if it is a townhouse or your home, I would say it's always good to, and more so in this market where it takes time to sell, and well positioned, well priced, well staged homes get sold faster. I would suggest it's preferred to have a vacant position. I hope I answered this question. Perfect, and I wish I could have had this question on the other program that I recorded before on new immigrants, but nevertheless, it's a question, and it's an awesome question, and thank you for asking. So my understanding is this couple already have 50,000 cash in hand, which they could invest, and they are also confident of saving 30,000 a year, which is quite good. And say, for example, over the next 3 years, they can save 90,000 or 100,000 plus 55. So at the end of 3 years, they'll have 155,000. And if they're buying a house for, say, even for 900,000, they need only 90,000 as 10% down payment. And also, they are getting 100,000 from a home to be sold back home. So before answering, let me also explain a few things that I have experienced with many of my clients. When immigrants say, we have a property to be sold back home and is valued at $100,000, I always tell them, let's talk when you finish selling it and when the funds are here. There are a few things you have to be very careful. A, because I come from Asia and I do understand what most of the Asian immigrants think of. Ladies and gentlemen, your property might be worth 100,000 Canadian dollars today. In 3 years' time, you might be selling at the same price, but the currency fluctuations are such in Asia, you might be getting to your hand only about 70,000 or 75,000. Be aware of it when you do your budget. So I would suggest, if you were to dispose of property back home, the sooner you do is better than later, because there is going to be huge currency fluctuations over the countries and over what we are. I have seen it personally, I have experienced it, and I think it's my moral obligation to tell you about it. That's one. Second, if you have 55,000 now, and if you are going to sell your home in 3 years' time, you sound a perfect candidate to go in for a pre-construction condo. Because with your 55,000, say, for example, I told earlier in another program that my family invested in 2 pre-construction condos. One of the units were 800,000. The immediate payment in the first year was only 19,000. The next installment is 40,000 after 12 months. And another 40,000 after another 12 months. And the final 40% after 3 years. So there's a stretch. So you can get into pre-construction now by using the 55,000 that you have, and also you're comfortable of the 30,000 that you're getting to your hand annually, that you can use those as down payments. That's one option that's available. However, that option doesn't give you a place to go and live immediately, or income that's coming for you now, and it will be blocking you for the next 4 to 5 years, where you have to take care of that and you have to go by that. What you haven't told me is that whether you have children or no. But if you don't have children, it might be a good thing, because you might be living on rent in a condo now, and you can manage the next 3 to 4 years. Even if you have children, you can manage with a 2-bedroom condo. But since I do not have all those information, I would say you are a good candidate for a pre-construction home. On the other hand, if you really want to go for a house, let's put a blueprint together and see in another 12 months time what you can do. Because let's remember, you have 55,000 now, and in 12 months time it's 85,000 that you have. And if you are somebody who can save 30,000 a year, I'm sure your income as a family is also quite good. So let's put a plan. In another 12 months time, say January 2024, we are going to buy a home, because you can even go for at that time you even have 85,000, which means you can go for a 850,000 home, 3-bedroom, 1-car garage. Most likely could be around that period. So in 1 year's time we can think of that. So you have many options, and one of the options that I would look at more is to look at study the market, understand the market. Let's go and have a look at properties, be an expert on the market on a month, because you're not going to be worried about the year over year drop in the statistical figures. You are more concentrating on a month appreciation figures, and then you will be confident to buy a house in 1 year's time. I would favor that decision more than even going for a condo. Thank you. Okay, here, thank you for the question. So the situation is, we have a family that has taken a mortgage 3 years ago at 2.5% fixed. So they are still paying up to now 2.5%. Although if they were to get a mortgage today, it will be 5.5 or 5% above. So which is doubling their monthly expenses. Fair enough. So the question is being asked, should we go for a renewal time comes in very soon, so whether they should renew it as a fixed or a variable. My question to them is, say like I explained before, every year there are 8 occasions that they announce about interest rate decisions. I strongly believe, but these are my beliefs and my opinions. The economists may think differently. My opinion is that out of the 8 interest rate announcements, there are going to be 2 that in the first quarter, which would say there would be interest rate hikes. So interest rate is going to be hiked. In the other 6, there could be many that says neutral, we are not going to increase, we are not going to change. But there could be about 4 which reduces. So I personally believe by next year this time, or December this year, we would have a lesser interest rate, and our interest rates will be coming down, because all activities done in the last 9 months to take control of the economy and the inflation is paying off. And also we may have a mild recession that would also help to bring the interest rates down. So in the long term, in another 6 to 8 months time, I see the interest rates coming down. So in that sense, it is not advisable for you to go and put yourself into a fixed mortgage, because then you have to pay for the next 3 or 5 years on the higher rate. So in that sense, it makes more sense for you to go for a variable. However, I'm not a mortgage broker. I'm not a financial advisor. My expertise are only in real estate. What I'm discussing here is my thinking pattern and what I speak to my investors and clients. Again, there's one more thing that you may not have looked at. Let's say, for example, you took, you don't tell me whether you have been having this house for more than 3 years or for the last 10 years or whether it's 3 years. It doesn't matter. But what I'm trying to tell you is, in your mortgage, when you took a mortgage, your mortgage amount would have been $500,000 that you're paying 2.5% 3 years ago. By the time now you are going to renew, although the rates are up, your mortgage capital would have come down. You would have done capital payments of about 150 to 200,000. Now your mortgage is only about 300,000. So if now you're going to take a mortgage for 300,000 at a higher interest rate, maybe evening off what you are paying now. Again, speak about that option to your mortgage broker and ask him about it. It may not be as bad as what you are thinking, and that's my opinion on this. Thank you. Oh, my colleague, thank you so much. Fellow realtor, love you. I wish I could give you a hug here for asking an awesome question. The question is, again, people who bought pre-construction, they might be getting the keys now or next month or the month after, so they have to go and get their mortgage. Are they in trouble because the interest rates are high and there is also a stress test involved, and there is also valuations coming low because the market has turned the other way in the last 9 months? Awesome question. Let's take it. I can't remember whether it was another program or this early in this program I explained, when it comes to pre-construction, I'm a total believer in pre-construction condos, because condos, from the time that you buy to the time that you get the keys, generally there's about 5-year period, and in that 5-year period you are going to have good, awesome and ugly times, and eventually it's an appreciation when you get the key. Absolutely. Now then we have homes or detached homes and townhomes that are on pre-construction. When you buy, generally you get 18 months to 24 months at best to close. Now most people who would have bought, like for example, one of the people that I know bought about 2 years ago a home for 1,650,000, upgraded it to, and it's costing him about 1.7 million, and the closing is coming up very soon. And now the bank is valuing this as 1.5 million. Yes, now he is in trouble, because for one, he is not getting the appraisal that he wants because the market has come down. Second, his mortgage qualifications had, now he's been qualified at 7.25 for the stress test. Furthermore, if he was planning to sell a property and buy this, finance this property, that property value also has come down. Fortunately, he was not planning to do that, so he's okay. But however, he is at the moment hit badly for about 250,000. Either he has to find this money or sell his property for undervalue immediately, or go for private mortgage. Yes, there is an issue. Now, on the other hand, if you take at condos, this is the question being asked is mainly about condos. Somebody who is closing a condo today would have bought that condo at least 4 years ago. I have a client who bought many condos. We did a project in Pickering 4.5 years ago, almost 5 years ago, where we sold room and a den with car park at 415 to 420,000. This is 4.5 years ago, and it's coming up for closing now, and they are in the process of getting their keys. Now, when it's 420,000, over the last 5 years, they have already paid 80,000 as down payment. So their mortgage is only for 320,000. While they are taking a mortgage for 320,000, that property value today, even after all the negatives that went in the market and now after all the devaluation that happened and the price depreciation that has happened, we are still looking at about 620,000 for that property. So in other words, you are going to the bank and asking for a mortgage for 50% of the value of the property that you are getting in hand, which means you are immediately able to get the mortgage without an issue. Furthermore, sooner than later, you can even do a refinancing because the property is valued at 650,000. So it is not a big problem for many people who have 4 to 5 years spread time to grow and build equity. On the other hand, if it is something that's short term, 2 to 4 years, 1.5 to 2 years that they've got, there may be no equity and they are in trouble. So those are the two factors that you have to take into account. And I always favor going in for condos because condos has a longer stretch, and also at the moment the rental market is high and you get a huge rental also. Remember one thing, because sometimes there are articles that are very confusing in the market. They basically throw out questions. I don't think even these people own homes who are writing this. They own say, why do you want to buy a pre-construction which is priced 15% higher than a resale house today? The answer is simple. High school child will say, pre-construction is always sold not on today's prices but prices that are 4 years ahead. You might be having a similar looking building selling at 600,000 today, like in Pickering where people can buy a room and a den for 650,000, which is 8 years old. But on the other hand, now you are getting a brand new one for 420,000 because you paid that extra 15% premium 5 years ago. So don't be scared of these where they say there is trouble in the condo market, it's selling for the same price as resale price. It is not a fact. Speak to the right realtor, speak to them, seek knowledge. Very interesting question, and thank you for asking, and I myself need some information. First thing, I don't have an answer, but I will definitely promise you that I'll seek out that answer and come back to you because there are a lot of things that are going on which are confusing. My legal advice that I have got so far is what they say is, as far as your SIN card starts with 9, you can buy a home. If it doesn't start with 9, then that's questionable. So I'm not too sure because even the government has given a lot of exemption to certain conditions. At the moment, if you're a foreigner, you can't buy. On the other hand, they say if you're a foreign work permit holder, you may be able to buy. Or if you're a student, foreigner, but a student, you may be able to buy. But I'm not too sure. I need to find out those information because it's complicated and involve many legal factors. But I'll definitely take it up next time when I record it, or whenever I do other programs. I will try to keep you updated on that. Thank you. Extremely good question. So just to let you know, there are two kinds. When it comes to the rental market, there are two things that you have to watch. One, any property that's completed and built or keys received after 2018, I believe November, there is no rent barrier to increase. You may lease it out for the first year 2,000, and you may say after the first year 3,000, and there is nothing wrong with it. On the other hand, if it's a property that's older than 2018 November, then if you had rented out at 2,000, you can increase the rent only by the inflation rate, and that the provincial government will indicate. For now, it's about 2.5%. Having told that, the question being asked is, why is rental rates so expensive now, and will it continue? The reason for the interest rate to be high is as follows. Sorry, not the interest rate, the rent. Let's look at this vicious cycle. We had COVID. The government have to overspend by printing money, 20.5% more money than before. That led to inflation. The inflation led to people not being qualified to get enough mortgage, and that prevented investors from buying homes. For example, last year, 2021, 125,000 properties were sold, and it was only 75,000 this year. There's a gap. That is mainly the gap that the investors did not buy, because investors always look at the cost of buying it, and people who want a house will always buy a house. So that gap of about 50,000 properties are in the market. So there are a lot of immigrants and students and newcomers who are moving behind these limited stock that's available in the market, and the prices are going up. That's one reason. I'll give you an example. If you take Toronto, city of Toronto, that's main Toronto, which is mostly the condos are an investors market. In December, only 11% of the investors bought condos in downtown. So 89% were bought by end users. Generally now, if we look at it in another 3 months' time, this will be about 50-50. So at the moment, the investors are not looking at buying properties because the interest rates are high, etc. And they are taking a break and watching. Like I told you, they may not be buying in the first quarter, but in the second and third and the fourth quarter, the investors are going to be very proactive. And when they are proactive, when they start buying, there is going to be more supplies, and rent in the third and fourth quarter may come down a little bit, but not much. Having told that, it's also important to watch if you are looking out for properties. What you should be doing is you speak to your realtor, and also ideally such, keep an eye on certain locations. Say for example, I'll give you Pickering Bailey Street as an example. This year, there will be about 3 buildings that will be closed. In other words, they were sold 5 years ago. At least 2 buildings are closing this year. When a building closes, when there are 350 condos in that building, about 50% will be investors who want to rent it out. So in all of a sudden, overnight, there will be a glut of properties in the market that's to be rented. So when that happens, you may see the rent price temporarily going up, going down, and these people don't mind even bringing it down because these were brand new buildings. They are not controlled by the rent control. So next year they can jack up the prices the way they want as per the market price. So I would suggest, third and fourth quarter will definitely probably have a lesser rental increase, but I think for the whole year as a whole, we may have 10% appreciation in the rental property market, in the rents, and that's accepted. And also, each time the interest rate goes up, investors will always jack up or increase their rental income because they want to catch up with it. The question is, what's a good time to buy in today's market? I think I answered this in another program, but I'll still try to say the best time is 25 years ago or yesterday, or the third best time is today. However, I think there is going to be a lot of issues with how we read statistics in the first 3 months of 23. So starting in January, February, March, April, and up to May, we will have a huge statistical decline in value appreciation or price appreciation in Toronto. While month over month will show we are on a swing where we have momentum for prices. And this would become, and in this case, most investors are aware of it. We speak to investors. Most investors will be buying properties in the first and the second quarter. And probably in the third and fourth quarter, we are going to see a lot of end users coming into the market. The savvy investor will buy in the first and second quarter, which it depends on what category you are. If you are a knowledgeable investor, speak to us, speak to everybody, look at the presentation, the arguments that we put forward with the numbers, and make a decision. But if you're end user buying, I think no matter what you say, they will always look at confidence level coming into them, and most likely that crowd will be more comfortable in buying in the third and fourth quarter. So I would say it depends on which category you are, and you got to make a move. It's extremely important to understand that I am giving my opinions here as a realtor and an investor, serving myself, my family, and my friends. It's also important to understand while talking about real estate, obviously we will be talking about legal side, finances, and taxes. However, I am not an expert on those, and I urge you to seek expert advice when it comes to those 3 matters. Friends, thank you very much for that, all those awesome questions, and please keep sending them and I will take it up at the next recording when it's been done. By the way, just to remind you again, I'm a realtor and I'm only a realtor. I'm not a lawyer, I'm not a tax consultant, and I'm not a financial specialist. So although in our industry, when we talk of real estate, we may have to talk of all that because hand in glove. On the other hand, please seek professional advice when you have to make a decision. Whenever you want to buy, sell, or invest, reach out to us. Give us a call at 647-283-1966. We will do our best to make you a multiple homeowner and wealthy homeowner rather than being someone who is motivated only to sell. Selling is good, but it's always good to hold on to wealth and build. Thank you very much. Have an awesome day. Riyaz Rauf, a household name.